Hello, thank you for watching the video. We're going to talk about SPY, QQQ, and other indices. What you're looking at is the daily chart of SPY. Um, and you're also looking at a few indicators. So the black one is the 200-day simple moving average. We've got these other two. The yellow one is the 20-day exponential moving average, and the green one is the 50-day exponential moving average. As you can see, SPY has been steadily moving higher since mid-June. And in the process, these two moving averages, the 20 and 50, which were trending lower, crossed, and they have now started to move higher. This is definitely a positive sign that they're moving higher. And what's happening is that these two moving averages are now moving up towards the 200-day moving average. You will see right here the 20 and 50 EMS fell below this 200-day moving average for the first time. This is a negative cross, so which happened at this time. And then it made an attempt, the two moving averages made an attempt to overcome the 200-day right here in April, but was unsuccessful. So now we have another opportunity where the moving averages are moving higher towards the 200-day moving average. So what we want to do is this to continue to move higher and eventually cross and go above the 200-day. That would be a bullish case scenario. That would be a bullish crossover, like this was a negative bearish crossover. For that to happen, the price needs to stay above these two moving averages. The price can consolidate between the 200-day and the 20 EMA. It can go sideways, which is fine. But what we don't want to do is see price fall and close below both the moving averages. In that case, this would be a bearish, and these two moving averages could potentially roll over to the downside, something like this, and begin a downtrend. We don't want to see that. Bulls don't want to see that. Bears will then take over. So therefore, the support level for SPY would be these two horizontal lines that I've drawn. So the first one is around 417. So this was the high back in June, and from that level, from then it broke to the downside. So 417 will also bring the 20 EMA in play. And below there, the support would be around 408, which is the bottom of this trading range, and that would bring the 50 EMA in play. So these two moving averages should provide support for any pullback. But if price closes below the 20 and 50 EMA, then that would be negative, because then what may happen is that these two moving averages may roll over, cross, and begin a new move to the downside. We don't want to see that. Bulls certainly don't want to see that. So it can consolidate, and I think this consolidation is actually healthy. That's because SPY has had a big run up, and it's now trying to overcome a big resistance level. So before it can tackle this in earnest, I think it would be best if it just consolidates, hangs around, goes sideways for a while, gathers momentum, and then makes a push to break through the 200-day moving average. I think that would be the ideal situation. Also, this consolidation, if it needs to consolidate above the moving average. This consolidation would also help some of the momentum indicators to release some of the overbought situations. So let's have a look at the momentum indicators a little bit and see where they are. So first one is the MACD. You can see when the rally began, MACD made a cross and then started to move higher. More importantly, it had gone above the zero line. So that's a crucial point. When it stays below the zero line, the momentum is negative. So right now it's above, but it's about to make a cross, which is fine. It's not a problem. But so long as it doesn't go below the zero line, What we don't want is something like this. It crosses and then goes below the zero line. This is the zero line. We don't want to see that. If that happens, that's an indication that momentum is weakening. But above the zero line, it's still okay. It can cross. Similar to this, it has crossed above the zero line, pulled back, came back to the zero line, and then held there. If you look at previous times, you can see that it crossed above the zero line, stayed above while price continued to rise. So we want to see something like this. We don't want to see it cross and then go below the zero line. That would be negative. The other one is this RSI. RSI, since it reached a low of around 30, has been gradually moving higher, which is good. But it had gone above 70, so it was in an overbought condition. So it's now pulling back. So what we don't want to see is, you see the green line right here, which is RSI 50. We don't want it to fall below RSI, to fall below the 50 level. So right here you can see it came close, bounced. Right here the 50 was a resistance. Over here 50 was held a couple of times, then fell. So what we don't want to see RSI falling below 50. So it can consolidate and these momentum indicators can come down, but there are limits. So the limit is that it should not cross and go below the zero line MACD and RSI to fall below 50. So as long as those conditions are met, especially on a daily time frame, I think this uptrend that we are in is going to be still intact. And obviously the price action is also important. We don't want to see price going below the 20 and 50, closing below 20 and 50. Then in that case, a lot of the good work that has been done will be negated. So we need to see the next few days, if there is any continuation to the sell-off from Friday. But those would be the parameters. On the price side, the two moving averages, the MACD to stay above zero, RSI to stay above 50. Looking at Qs quickly, similar. Again, big run up, but Q didn't go stop short of the 200-day moving average, which is fine, because after a long run up, you want to pause, gather momentum before tackling such an important level. You can see that Q had difficulty overcoming 200-day here, 200 here. So there has been rejections previously at the 200-day. So obviously, Qs need to respect this line. So before that, it would be helpful if it basically consolidated. But what we don't want to do is, we don't want to see it close below the 20 EMA, which is around 320 right now, and the 50 EMA, which is around 310, 311. Because if it closes below, then obviously it would show that things are weakening. MACD has started to cross again, that's fine, but so long as it doesn't fall below the zero line. What we don't want is something like that. It crosses and then goes below the zero line, and that could start a new trend to the downside. RSI has been pulling off from the overbought level. It was around 70, so which is again fine. This green line is the 50, so we want 50 to provide support, like here it came back to 50 and then bounced. So 50 was a resistance here, the 50 level here, tried to overcome but couldn't, and then fell back. So it can pull back to the 50 area, but going below, closing below that would indicate weakness. So that's for Q. If we look at the 10-year, you can see the 10-year has started to tick up again. Friday it was up almost, it was up 9 ticks. Since reaching a low of around 2.5, it's now just under 3%. The momentum indicators now are moving higher. RSI has been moving higher, MACD is moving higher, but MACD is still below the zero line, so it's just come up to the zero line. So ideally, if it can stop here and then like here what it did, if it stops at the zero line and heads down, that would be ideal. If it goes above the zero line, like here, then we could see 10-year rise further, go above 3%, and then 320, 325 could very well be in play. So this is something to keep an eye on, and this could keep stocks from rising because the 10-year is starting to make a move. Well, with 10-year rising, what we see is that the dollar is also beginning to move to the upside. So it had gone through a consolidation phase, and then last week was a good week for DXY. It's been moving higher. You can see the MACD since pulling back came to the zero line level and then made a cross. So it started to move higher. RSI has been ticking up again. So dollar looks like it has more to the upside. At least the momentum indicators are positive. So previous high is definitely in play on a closing basis. So let's see, it's around 108.6 using on a closing basis. On an intraday basis, it was around 109.2, so just above. So this is concerning. We don't want to see dollar rallying. We want dollar to be weak. But for that to happen, this bond yield needs to sort of stop going up. If we look at oil, oil is quite weak. If you look at the daily chart here, you can see it's been making a series of lower highs. It has fallen below this support around 95. There is support around 85 right here. But more importantly, the momentum indicators are weak. You can see that MACD, it had closed below, right now it's below the zero line, and it's been going sideways. We don't see any upward pressure in MACD yet. Until that time, any gain is likely to be short-lived because MACD is below the zero line. RSI is also below the 50 level right here. It's below the 50 RSI 50 level. So momentum right now indicators are weak on a daily basis. So the resistance is 195 and support is at 85 for oil. If we look at VIX, so VIX, well, trending lower. We have this trend line, bounced off this level several times, but broke below this level, and then it's been below this level since. So any rebound should find resistance at this level initially, and beyond that the resistance should be at this level, which is around 24. So these two levels are going to provide resistance, and until it goes above 24, not expecting. The other thing is that the momentum indicators are still weak. RSI is below the MACD is below the zero line. RSI is below 50. So I'm not seeing a great deal of momentum to the upside. So until these indicators turn up and start to head up, not seeing a massive spike in VIX. Once it goes above the 50 line and once MACD crosses above the zero line, at that time possible, but at the moment not seeing massive spike, or it's likely to be short-lived. So that's for VIX. The other thing that was noticeable is that in the last week, seeing that investors are positioning themselves quite defensively. If you look at some of the defensive S&P 500 indicators, ETFs, XLU has been going up. In fact, last Friday's drop didn't have a material impact on XLU. So XLU it is overbought. It is definitely overbought, no question about it. RSI is well over 80. Last time RSI was at this level, It then had a big pullback. So it looks like investors are defensive, probably expecting market to pull back. So instead of moving to cash, they're moving into more defensive areas, utilities. If you look at XLP, which is another defensive area, that's also steadily moving higher, overbought. Some of the momentum indicators, energy, seeing that it made a new swing high after this big drop in June. Energy XLE is slowly coming back again. Many of the individual names are showing some bullish chart pattern. So definitely, and obviously healthcare, that's also holding up quite well. On the other hand, the growth areas such as XLK, you can see a red candle here. XLY, which is discretionary, you can see that came under pressure on Friday, down 2%. XLF, the financial, that was also under pressure, down almost 2%. So you can see there's been a rotation from growth into more defensive names. Perhaps investors are thinking that the market could pull back more, so they're positioning themselves accordingly. Well, that's all for the update today. Thank you very much for watching the video.